name is Richard Peterson. I'm a psychiatrist and a quant, and I work at MarketPsych Data, where we do natural language processing of news and social media. In doing so, we're able to extract time series of data around themes, topics, sentiments for companies, countries, currencies. And we've recently been working on ESG data, environmental, social governance themes about companies. And in producing that data and the quantitative analytics that we've done on that data, we see some very interesting. So at MarketPsych Data, we've been analyzing this quantitative time series of ESG data using rotational models and some other machine learning techniques to understand what are the themes in the ESG world that drive stock and country index prices. And of course, there are some key themes that do drive stock prices over time. And in the ESG framework, there are niche themes. For example, in some countries, there are themes that drive the prices. In India, for example, we see that customer satisfaction seems to be driving the prices of stocks more than other themes in the marketplace. In other countries, we see, for example, in China, we see that CSR or sustainability reporting tends to be quite important for driving stock prices there in China. Now, universally, there are also some themes that seem to drive prices. For example, we see that workplace sentiment seems to be important anywhere in the world. So whether employees are saying good things or negative things about the company that they work at, that tends to be a predictor of the share price going forward. And this is actually consistent with academic research on largely American companies over the last 2 decades, that what employees say matters to the share price of the company. And it's a bit of a canary in the coal mine situation for corporate employees. They can actually tell what's going on at the company maybe faster than the markets can. Another universal theme that we see in our data is management sentiment. So what people say about the managers of a company in the public media tends to influence the share price going forward. So if they have positive perceptions of the management, the share prices tend to go up at those companies versus negative share prices, they tend to drop. And we see these universal themes are often consistent with the academic research that's been somewhat spotty, but interesting over the years. And so now with this time series that we've created of ESG data, we can see consistent patterns aligned with the academic literature that can be updated in real time regarding what's happening in the media about given companies, especially in the ESG space. Now, specifically, when I mention real time, we do monitor what's happening to companies on the minutely, daily, and hourly basis. So we can really see a snapshot minute by minute of what's happening in the media. Controversies in the ESG space also have a very predictable impact. And the impact from controversies is often a ripple where it shocks the price and the price falls. But in some cases, the markets overreact to certain themes and those prices rise back up again. In other cases, the markets underreact. And after the shock initially hits, people start processing the information and they realize it actually is worse than they thought, and the price keeps drifting lower. So I'll also talk a bit about ESG controversies or scandals as they break in the media about given companies and how those patterns tend to play out. So given all that I've explained, we look forward to seeing you at our talk and hope that you enjoy it. Thanks for your time.